back to Nasdaq Trade Talks. I'm your host, Jill Malandrino, Global Markets Reporter at Nasdaq. We've been coming to you live from the 85th Annual STA Market Structure Conference. We're calling it Shaping the Future. Helping me round out coverage for Wednesday, we have Jonathan Clark. He's the CEO of Luminex Trading and Analytics. Thank you so much for joining us here today to round out coverage. Let's talk about buy-side trading and regulatory trends. Are all institutional investors, are they still committed to trading blocks?
I think they are. So, institutional traders are going to have a variety of orders that are going to hit their blotter. Some of those orders are going to be small in nature, fire those right out electronically into the open market. Perfect, easy peasy. But these larger orders that these institutions sit on, who are managing a lot of 401k money, pension fund money, we're talking about 6-7 figure size orders.
Right.
They're going to need blocks. They're going to need a way to move, buy and sell stock in larger quantities because it'll be done more efficiently.
I feel like at STA we get a lot of the perspective of the sell side, the exchanges, the regulators and so forth, but not so much on the buy side. So your insight's interesting here. What are some of the issues that the buy side faces when it comes to market structure challenges?
Yeah, so whenever I travel in these circles, you'll always hear the institutional traders say the market is complex.
Right.
There's so many venues, there's so many means to access the market, so complexity is going to be the first word you're going to hear out of any institutional trader. But that said, it's become pretty efficient, certainly for that smaller order that I was describing earlier. So as they look for liquidity, that small order is going to run into that 100-lot bid and offer in those tight spreads, very efficient. But where complexity doesn't work is the large order. That institutional trader does not want to expose that order, shall I say, without discrimination.
Right.
They want to make sure that they can find large pockets of liquidity, and they're going to need venues like ours that are really focused solely on those.
How well do you think the buy side has adapted to MiFID II?
So MiFID II, oh my gosh, that topic was talked about ad nauseum for a long time.
I remember last year especially.
And so I think there is a sort of a sigh of relief that MiFID II has sort of come and gone. I think what you find is that the large institutions have certainly, made the changes in their business models and the changes the way they do business and consume research. Definitely. I think sort of those smaller and the mid-tier firms are sort of saying, look, I'm not sure that's necessarily, required changes that we need to do,
right.
But the large institutions have definitely done it, and I think the feedback you hear is very quiet, so I think it was done very effectively.
With the new regulations that the landscape is focused on right now, do you think that's going to benefit the buy side? Are there some opportunities out there?
I'll tell you, I think the tone that we're hearing from the SEC right now is fantastic. It definitely feels sort of pro-market. It feels like they really want to sort of join arm in arm with the institutional investors, with the retail investors, and try to figure out how to make the markets work more efficiently. I think they want to talk about getting more more companies to go public. It feels like we've got a really good vibe, and I feel confident that the regulatory regime that we're facing now is certainly more open and welcoming.
It's certainly more accommodative.
I think
for
so.
Sure.
I think so.
All right. Well, thank you very much for joining us at STA, and thank you for joining me throughout the day. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.